More uncertainty in world currency markets today. The euro hitting a 4-year low against the U.S. dollar before coming back a little bit later in the session. Some buyers coming in. My next guest says there is safety in gold in an uncertain world. Joining me now, we have John Hathaway, fund manager at Tocqueville Asset Management. He helps manage over $1 billion at the Tocqueville Gold Fund, which has outperformed 96% of its peers year to date. John Hathaway, welcome to Bloomberg.
Hi, Pimm.
Make the case for gold right now at over $1,200 an ounce. Is this just a play on global uncertainty?
It's a play on monetary disorder. I mean, I think you can make a case that the current monetary regime is kind of in an end game. And it's not a matter of inflation or deflation. I think that the structure that we have has been the basis of world trade, dollar-based reserve currency system, is under severe attack by market forces. And I don't think it matters if the euro is strong or weak versus the dollar. I think basically 5 years from now, we're not going to have a dollar-based currency system.
What are we going to be using? We're going to be using gold to transact business?
I think gold will benefit from it. What we're going to be using, I have no idea because I have no say in it. But I definitely think that what we have today isn't working, and you're going to see an effort to find something that does work. Gold would be an answer, certainly, at a much higher price. Authorities usually resort to gold out of desperation, not because they like it. So that could be part of the answer, but certainly what we have today just isn't working.
So you're saying that a vote for gold increasing in value means people don't like fiat currencies?
Fiat currencies, sovereign debt. The euro crisis was really it wasn't all about Greece. It was all about markets rebelling against the sort of financial model of the current democratic state, which makes promises to voters which they can't keep, and then they have to inflate them away.
So what would be a price for gold in that kind of scenario? I mean, as I said, we're at $1,226 today. Is there a price point that you're looking for in the future?
I don't have a price. It depends on how much more damage public authorities do in terms of public policy. I mean, it could be much higher. I mean, the damage they've done so far is enormous. I don't think it's fully reflected in the gold price. I actually think if they continue to think that they being the policy makers in the U.S. and Europe, think they can patch the system together, they'll do a lot more damage.
Let's talk about some of the companies that are in the portfolio at Tocqueville. Talk about Osisko. This is a Canadian company. They're working on bringing a big open pit mine to production.
Correct. We've been involved in this company for about 8 years. We've financed it at various stages along the way. It's gone from being almost a micro cap to a almost $4 billion market cap company today. Within a year, they'll be pouring gold, producing cash flow. It's very cheap based on any metric you can look at. Management is smart. They're acquiring additional properties to expand this business model, which they have. Quebec is the safest area and the best area to operate in the mining business in the world.
Tell me about Newmont Mining as well. I know that that's also on your list in the portfolio.
That's one we like. We've liked it for a long time. New management came in 3 years ago, much more financially oriented.
Took off all the hedges.
Yeah, the hedges were gone long before that, but they're paying a lot more attention to return on capital, allocating capital to good projects. It's not really a growth story the way Osisko is, but as they replace expensive production with cheaper production, their margins will expand.
All right. I want to thank you very much, John Hathaway, coming in from Tocqueville Asset Management, the Tocqueville Gold Fund, sharing your insights into the precious metal.